Hello, Jim here. Today I wanted to just take a moment and wish everyone a Merry Christmas and Happy Holidays. It's the Sunday before Christmas, and I am going to trade probably Monday and Tuesday. And I do plan to release another video on Thursday. So just wanted to mention that. Also wanted to talk about a little bit about what happened last week. The Fed did shake the markets a bit, but Friday we did get a bounce. I expect kind of a Christmas rally over the next 2 weeks. A lot of people are taking vacation. The volume should be down. And there's not a whole lot of earnings or news that'll be hitting the market, which is kind of a good thing. So I think it's going to be kind of smooth and steady sailing. And that at least has how I'm looking at it. Today, I wanted to share with people is how I manage my trades. I've talked about this in the past, but I'm actually going to share with you through the rest of this video the steps I actually take when I have a trade that's, at risk, or, maybe they got hit hard from earnings, or maybe some kind of news has come out like the CEO is leaving. So I'm going to share the steps I take and how I make my decisions, how I roll in a different number of ways. I roll vertical put credit spreads, two vertical put credit spreads. Sometimes I roll a vertical put credit spread to a cash secured put. Other times I'll take assignment and then I'll lower the cost basis by selling the long put if early assigned. So I do a number of different steps. So I'm going to talk about that in the rest of this video and kind of give you a feel for it. It's how I'm able to save a lot of my trades and turn potential losses into profits. So stay tuned. I think it's going to be well worth your while. Okay, now I've set up just a basic outline. These are the steps I typically like to take. So the first one is if a position gets into trouble, either through bad earnings, bad news, or for whatever reason, the first thing I typically do is analyze the position. Why is it dropped? I look at, is it because of news? Is it because of earnings? Has anything fundamentally changed? And typically what I'll do is I'll come over and I'll look within Seeking Alpha. And here you can see Micron actually dropped big time last week, I believe, Wednesday. And then it did recover some on Friday. It got down to 84 and now it's back up to 90. And it looks like it's also after hours up a little bit. So the earnings, if we come over to earnings, they actually beat earnings. They beat both GAAP and regular earnings per share, as well as they did have a little bit of a revenue surprise. So the issue was more their estimate. I typically, when earnings come out, I'll come down here and I'll look for the news article that talks about it. Like they'll have the earnings transcript, which is really nice. And then you can see the results, and this is, so they gave guidance that their first quarter was going to be down, and down by quite a bit, but a lot of this relates to forecasting. So I believe their original forecast was way too high. So they're going to do between 133 and 153 when they were thinking they were going to do more like 192 per share. So, and some of that is related to inventory. I do believe that they have a little bit too much inventory. But they're expecting the next quarter to be right on target, and they should be fine going forward. So if we look at earnings and we come down here, we can see they still have kind of crazy earnings. So even though the next quarter is going to be down, it's still up 245% compared to 2024. And then, you've got significant year over year increases the rest of the year. Now, also, if you come back to summary, you can see here they've got a 13 PE. They're going to be making almost $7 a share, which is quite a bit. That has gone up since their earnings was updated. We can also come over here to growth, and we can see their growth is still quite substantial. This has been updated for the recent numbers. So they're still having very good revenue growth and very good year over year income. I also like to look at profitability, and they're still A plus, and they still produce a lot of cash. So nothing fundamentally has changed, but the momentum, that's the big difference. And, there is an argument for momentum stocks, and currently they're not in they're not in momentum. Their momentum is downward. So that would be an argument against it. But if you go out to, 5 years, you can see they're not outrageously priced, especially at this 80 range. I mean, I don't think they got back at that range early in September. And then before that, it was in January. But with their revenue and growth, they did hit a spell about a year ago where I believe they had too much inventory, so they had to cut back on production. But overall, things still look okay. The other piece I like to look at is the 5-year Bollinger Band, which is what this is. And you can see they're right here down below the lower band. And then in the past, you'll see whenever they hit that lower band, they typically will bounce. And you can go back, last time they hit it was, they bounced again, they bounced again, they bounced again. And that's kind of what we're seeing. They've gone up a little bit. I believe they're right at 90, so they're right here. So they did get a little bit of a bounce off the Bollinger Band. So all things I like to see, in the sense that, do I think Micron's going to go down? Is it going to be a $60 stock? I don't think so. Not with this kind of growth. I mean, when they're making $7 a share, and you compare them with, some other companies, like, let's see, well, how much is Nvidia going to make? Just out of curiosity. Nvidia is going to make about 295, so they're going to make double, and they have a PE of 45. And Micron's got a PE of 13. So what I was thinking was going to happen when they did earnings is I thought they would get up to this 125, that they'd be a lot like Broadcom. So if you look at Broadcom, you can see it got a pretty significant bounce. Now it's come back down, but I thought something similar might happen. They make similar chips, and they are definitely focusing on better chips and AI related products, as well as data warehouse type products. So not very different from them, but they did the opposite. We can go back to Micron. I mean, they went the opposite. They went down. So is it a buying opportunity? I think it might be. I don't know. You might think otherwise. So, but in the meantime, I have a position that was kind of deep in the money at 90. You're talking $20. I like to use this rule. I call it my 10% rule. So if a position is more than 10% in the money, then you need to be concerned that it's a good chance it's going to be assigned early. How do I come to that? I went through all my trades over the last 3 years that were assigned early. And in almost every case, there's been one exception. Once they got past that 10% in the money, they were assigned to me early. And it was actually even more important than how close you were to expiration. I had a lot of positions that were assigned much earlier than expiration. I mean, it definitely, expiration the closer it gets to expiration, the higher the chance of early assignment. The other point is the OCC, who controls early assignment and how they divvy out early assignments to different brokers, they have a FIFO, first in, first out. So just the act of rolling can limit your chance of being assigned early. So just something to keep in mind. So I do think that Micron's a good stock. I do think it could very well be back, in this 110 range. So this is where I start making decisions. I like to throw the trade into one of my trading pages. This is Schwab. I'm still learning Thinkorswim. I know a lot of people, subscribers and members, want me to use Thinkorswim, but I just find this interface a little bit easier, especially when I'm doing things like this. So here you can see I put in the different pieces. So I have on 117, and I've rolled them. So actually my positions are lower. I believe I'm at 92, but just say you had a position at 117.25, 110, 100, you're very deep in the money. You can see it, the pricing here. So in order to roll, you're closing your current position and opening a new one. Rolling is fancy terms. It's just closing your existing position, opening a new one and bringing in enough cash to close the original. So in this case, I've got to bring in quite a bit of cash, almost $10. You can see sell to close, I'll bring in 10. So it's around $10, $10.50. So in my roll, I have to bring in at least $10.50. So if I rolled it out to 221 and went to 190, so dropped everything $10, I would have to pay 470. So I have a couple of choices. I could say, well, I'm willing to pay 470 because I think, you know, I typically don't do that. If it's 20, 30, 40 cents that I have to pay, then I will, but I typically wouldn't pay that. So one thing I would do at times is I might widen the spread. I might say, well, let's try 95. I went the other way. Let's say 85. And here you can see, now this is kind of weird numbers, but it would be between these two, the 255 and the 335. So instead of $4, I'm definitely going in the right direction. I could also look at 80, and here I'm getting between 102 and 481. Again, the numbers, it's Sunday, so the numbers are a little bit mixed up. But you can see I'm widening the spread, so I'm taking more risk, but this number is what's really important, the 100. I'm lowering that number so that I pick up Micron, if it gets assigned to me early, at 100, not 110. You know, my goal being, well, maybe in the 140, 150 range in 6 months or something, or by the end of the year, or by the end or midway through next year. Now, another choice I have, and this is rolling, I could also go out farther. I could say, well, I'll go out to 321. And then at this point, I am making a little bit of money on it. So let's just say it is around 179. I could potentially say, well, let's go back up to 85. So it's only a $15 spread, which is 12 minus 7. So it's like $2 to $3. But that typically, the farther you go out, even sticking to the original, which is 190, these numbers should go down. And you see this, there's a little bit of oddity with the numbers. But we could even go farther out. We could say 417, and I've gone out as far as 6 months at times. Again, this number's looking really weird, but it could be related to it. Now, part of the reason is I'm paying so much for the put. So if I lowered this and I said, well, I'm willing to take a $25, so I could say, well, I'll go to 65, and you can see, wow, that completely changes things. But I've upped my risk. I'll do this. I'll mess around with the expirations. I'll mess around with the strikes to get to a point where I think it's worth it. In the end, I want to get pretty close to this 92, so I might even lower this. Let's say 95. If I can get to 95, because I've already brought in some premium. So this would almost get me there. I would bring in potentially somewhere between these two. Again, we wouldn't have this big a spread, but I'd have to roll it all the way out to April. So I don't know if that makes sense. So let's go back and say, well, I'll roll it out to 221, taking the wider spread. This gives me about $8. So it's around a $2, probably pretty close to this 256 is what I would have to pay. And I'm not spending a whole lot for this. So it'd be relatively hard to get it to 90. Now, I could take this off, but it would only save me 30. So 221, it's probably going to be hard for me to roll to 221. So I do need to go back to 321. So here it would cost me 242. So it would probably be, well, this is the 880 minus the 770 or $77. So definitely getting closer. But the fact of trying to get to 110 to 95, I might not be able to do that. So I might have to come back to 100. So let's go to 100 and let's take this up a bit. So 12 minus 6. So this is $10. So I'm taking 6. So that's 425 makes the most sense. But I am paying 590 to 550. So, maybe I'll take this off. And then suddenly I can potentially turn this into a cash secured put and still make $1.65. Again, the numbers are a little squirrely, but let's just say $1.65. So if I could get it to a cash secured put and my cost basis would be right around 98. I'm a lot less deep in the money, but let's see if I can roll it back a little bit, see what 95 looks like. So I'd be spending about $1.65, which is the $10 minus the 880. But here again, I could play with going a little farther out, but here I could make some money. I could get it down to 95. And again, I could make 95, so my cost basis would be 94. So these are the kind of steps I would take. I could potentially, if I'm doing this, I could also add the leg back. I could also, if the early assignments already occurred, then I could just sell the long put. So I could pick up, in this instance, I could sell this and bring in $10. So say I was assigned at 110, the shares would come in at 110, but I could sell this long put. I probably wouldn't go for 1025. If this was accurate, I would probably go, I like to go to the mid, usually add maybe somewhere in between these two. So I would do pretty close to 1220 and try to bring in that amount. So it would be 110 minus the 1220. And then, my cost basis would be more like 98, 97, not including whatever premium I would have already brought. And so in a sense, I did the trade originally at 110, 100, but I'm getting 98. So hopefully I haven't confused you guys, but I'll play with either Fidelity's trading page or Schwab's and plug in the numbers and figure out what works the best for me. Again, trying to get as close as I can get to this number. And the deeper you are in the money, the more difficult it will be. But one thing you always need to remember is if you're buying the stock and say you had made this trade originally quite a while ago, and you had done this spread at 110, the stock price was probably pretty close to 120. So you would have bought it probably over here somewhere. Let's just say we made the trade back here. You probably would have made it at closer to 130. So you're still doing better. If you end up owning it right around 108, you're not at the lowest point. It's really difficult to get, to pick up a stock at the low point, but you're definitely doing better than if you had purchased those shares originally. And that's what I found. And that's also why I found long term, I do better on down years. I don't quite do as well on the up years, but overall, if I look at 2 to 3 years in a row, I typically will do better, especially if we have something like a 22 where we lose 20%. So this is how I typically do it. And this is what I've done recently with Micron. I believe one is I was able to roll 1 to 95 and then the other one to 92. And my thought process is it's going to trend up. So I wouldn't be surprised if Micron is back into the mid 90s, that it keeps trending up. And then maybe even this week we'll be in the mid 90s. I could be completely wrong and it goes south and gets into the lower 80s, which momentum can go both ways. It can take you up higher, but it can also really devastate some of these valuations for these companies. But overall, I do believe that fundamentals do matter. The price you pay does matter. And I've seen it. I remember back in 99 when I had a lot of FOMO because I had a lot of friends. We were working in a startup and, they were buying some of these companies that, the argument was, well, it was number of clicks. Clicks mattered. It really didn't matter what they made. But I know 2 years later, it was a completely different story. By 2001, most of those investments had gone to a third of what they were originally or nothing. They literally went away. So that's what I wanted to share with you guys. Let me know what you think. How do you like to handle these kind of roles? This is part of the reason I like spreads, that you have more choices. If you just had a cash secured put, it's simpler to trade, but you don't have as many choices. You can't, turn this into a cash secured put because you can sell the cash you picked up from the long put. This is why I prefer vertical put credit spreads, especially when the market is so pricey. So let me know what you think. Leave a comment. I like to answer most of my comments. And sorry if I got a little bit long-worded or winded. I have a tendency to do that. But again, I hope everyone has a wonderful Christmas and holiday, and I look forward to seeing you soon.